Welcome to Mentoring Moments. Mentoring Moments is a sub-series of the E-Commerce Edge podcast. It is composed of clips taken from Jason's one-to-one and group mentorship sessions. Welcome to another episode of the E-Commerce Edge podcast with me, Jason Greenwood, your host. It is my absolute pleasure to welcome our next incredible guest, Mr. Ruston Miles from both Bluefin and PayFactory. Welcome, Ruston.
Hi, Jason. Great to be here and thank you for having me on today.
It is my absolute pleasure to have you along for the ride with me today. And we're going to talk all things payments, digital payments today. And you are definitely an expert in this space. You've been doing this for a very long time. Bluefin, 23 years, PayFactory, 5 years, also a member of the PCI Security Standards Council Board of Advisors for over 6 years. This is not your first rodeo when it comes to digital payments, is it?
It's great when you're passionate about something that you do, because a quarter century is a long time to do something. So the great thing about being passionate about payments is that it has evolved very many times since the early 2000s. The big .com bust, we could only think about the World Wide Web from like fancy business plan ideas. And it was really hopefully a lot of folks that I'd like to include myself in that group, who are innovating how to use this darn web thing and internet thing to solve everyday business issues. And that then leads you into the evolution of payment security and payment facilitation. So something that I was very passionate about for a quarter century has evolved over that time to keep it exciting as well.
Yeah, and look, it's interesting because my experience with particularly digital payments and digital payment solutions has evolved over the years. I've been involved with everything from on-prem technology like Magento and having to help clients go through the PCI compliance process and security management process and making sure that they can retain their merchant account with their merchant bank provider by proving security. And then if there's a breach, then you potentially lose your merchant account or you lose your PCI compliance rating, moving all the way into the SaaS world where with most SaaS platforms that manage payments, they are then become responsible for the PCI compliance, but then the whole checkout experience becomes ultra locked down as a result. You can't change the checkout experience very much, and the best you can do is maybe add a few additional payment methods to checkout, and that's about it. That's happened over the years. And then we have custom solutions that require some sort of embedded payment capability, all the way from rebilling, tokenization, saved credit card details for things like subscriptions. So there is a whole payments infrastructure that is out there in the world that I think most people, even brands that sell online, there's a whole series of payment infrastructure. And if the only exposure they've ever had to that is through a platform like a Stripe or something like that, or through a payment gateway like a Braintree, or maybe if they run Shopify, they've only been exposed to Shopify payments, for example. There's all these rails, there's KYC requirements, there's AML requirements, there's security and PCI requirements. There's this whole world of digital payments out there. And then when we bring crypto into the discussion, that's a whole new thing. This starts to get really messy if you don't live in this space every day, right?
I totally agree. Boy, you've really hit the nails on the heads there. What's interesting, when I first got into payments a long time ago, payment security wasn't the main thing. It was just about hauling transactions from point A to point B. And we started off, we thought it was cool. And it was at the time bringing real-time authorization for credit cards into contact centers and call centers, right? Oh my goodness, you can, while they're on the phone right now, at the moment of interaction, you can, hey, give me that card again. I didn't approve, rather than having to call them back for days. That was cool. So there was all these different evolutions from the payment side. What happened was that payments innovation outpaced payment security innovation. And so then you had the bridge, the delta there, the gap was 1,000 breaches a year. And we remember that starting in 2013, starting with the big Target breach. And then, of course, what large names weren't included there for many years. And so then payment security, the industry was punished with, hey, you didn't mind this, now you have to. And what happened there is then, as you alluded to, payment security became the main thing for a long time, which then slowed innovation and slowed interaction and added friction, added back office friction and compliance friction and costs to organizations and roles and responsibilities and people and personnel that didn't even exist in those organizations before. And then you got a small business where you're like, you got to be PCI compliant. The small business may not even be really qualified to fill out a security questionnaire. They're not a security professional, but like, you got to do it. And so it's like this whole thing, and for good reason, had to shift. That's because it outpaced the payment security innovation. That's where we really saw as Bluefin, to your first point, like we needed to go in and say, look, let's make, this is hard for us. This is going to be really hard for a lot of other folks that don't know what we know, who aren't as nimble as us, et cetera. So let's go ahead and make this our thing. And so we did. And then there's your early adopters. So we had to go in through folks that started off with a little bit more of a timeline to focus on it, and also a little bit more philosophical. So it was like nonprofits and higher education and government entities, a lot more to lose, but also folks that would step back and maybe take a more a longer approach to things. And also, by the way, I say a lot longer to lose because they really care about their students. It's not like it's a shoe store where you have a breach, you just come out with, you change Ruston's shoes to Jason's shoes and you open your storefront again. No, this is a university that can't just go out of business and restart something new. And then your other point is that, yes, things were quite simple. I'm not sure that they were simple. I think they were just younger or more immature 20, 25 years ago. But with all of this additional innovation and the security that we needed to do, it became way more complicated for folks to get in. And now you're talking about things like, hey, my interaction point is just Shopify. Let's just e-commerce. What about mobile? What about retail? What about card present, card on file, recurring billing, contact center? Oh my goodness, all these different touch points. And so software really has come in. We've seen ISVs and SaaS, independent software vendors and software as a service providers come in and say, hey, we want to eat payments. So they're eating payments and they're taking it on. And I like to say, is software eating payments, or are they eating payments and now they're just digesting it? And so during that digestion, it's, oh, wait a minute, there is a lot more here. It's just bigger than a breadbasket. And that's where you see companies like ours coming to them to say, okay, instead of giving you a toolbox of things that you need to go figure out, orchestration. And you see the new generation of payments orchestration players out there like Spreedly, et cetera. Companies like Spreedly, they're focused solely on e-commerce payment orchestration, right? Where you can integrate once and work with lots of gateways and use one token with a lot of gateways. And that's really neat. Bluefin's taken that a step further and said, this really needs to be omni-channel. What about your card devices, your user points of interaction that are real card present? What if you've got vending machines that are unattended? And what if you've got devices in the sky on an airplane? And what if you've got, think about an airline, you got back office, front office, airplane, cargo, card on file, website, all these different things. And if you're a software provider, you want to control it and you want the data and the management of it, but you also need to have people to orchestrate that. You need to have a platform that does that. And that's what my company Bluefin does, is to say, hey, let's go ahead and be that payments orchestration platform that's an omni-channel or payments orchestration, not just payments orchestration, but omni-channel payments orchestration to include both card present and card not present, which is very unique because of all the different device manufacturers, key injection facilities all over the world, terminals, interfaces, all terminals, yeah. All of that stuff is a whole other world of complexity. And then when you take in the other company you mentioned, PayFactory, payment facilitation, when you look at the idea like Stripe or an Adyen or a PayPal or these kinds of folks that are offering payment facilitation, which is very attractive, and we get into that more later, but that needs in it of itself its own orchestration to be able to work that. And so really when you take the two companies that I founded and put them together in that way, and you look at it through that lens, aha, we have full omni-channel and acquiring PayFac orchestration so that software can come in and have everything they need, work with multiple processors, multiple gateways, have one token to rule them all, one key to rule them all from all the different devices. And so that's really where our goal and vision is to serve exactly what you said, which is to make this actually make sense for software.
And I've seen a few different false starts to payments security over the years that have dramatically impacted customer experience, particularly online, and has killed conversion rates over the years in an effort to reduce online fraud. And I'm going to give you a couple examples of those, and I'd love your take on this.
Sure.
First of all, a lot of payment gateways forced merchants to move away from an embedded payment solution or an Ajax-based payment solution to a payments page, where at the point of checkout, they got redirected. When they selected credit card, it would redirect them to a hosted payments page. And maybe the only thing that would be on that hosted payments page would be your logo, but it would be a different URL. And then it would take the payment securely on that embedded payments page. It would then, once the transaction was completed, redirect you back to the order success screen on the merchant's website. Totally broken experience. Customers don't trust it in many instances, and we would find that abandonment rates would go up. They would say, this URL doesn't match the company I was just buying through. This is dodgy. I'm just going to kill the screen and I'm going to abandon the purchase. Then we saw, in an effort to control fraud, implementation of 3D Secure by the major credit card companies and major banks. Total false start, absolutely terrible experience. Needed to have a dynamic token for every single purchase. People needed to then, in order to generate the dynamic token, had to have the app on their phone or had to receive it via email, then copy and paste that into the checkout screen. Again, just through abandonment, absolutely through the roof, because it was all too hard, particularly for older users who were not tech savvy. 3D Secure was a total abomination of a solution in my experience, and it absolutely destroyed many online businesses when their gateway vendors and their banks forced them to implement 3D Secure. Now, the latest thing is dynamic CVV, right? Here in Mexico, where I am, dynamic CVV for most card issuers, not all, but most. So I'm with BBVA Bank here, and for all online digital purchases, I must generate a dynamic CVV at checkout. And for the checkout experiences that do not support dynamic CVV, I have to re-enter my credit card details as a new payment method every single time I make a purchase through one of those merchants because they do not support dynamic CVVs. I have seen many false starts like this over the years that have absolutely destroyed the customer experience in an effort to stem online fraud. Have you seen the same?
Absolutely. Seems like we live in the same world, man. So that's exactly what I've seen in the journey I've seen. I'm gonna try to hit all those points with my thoughts, and if I miss one, please give me a nudge. Yeah, consumers will punish, as you said, will punish friction with abandonment. I mean, I do it too. And so at the end of the day, I'm a consumer as well. So are you, right? We've all been there and are there every day, it seems. So that's an important thing. So the original payment page concept, oh yeah, that's great. Let's just have them over here. Then there's no security and whatnot. But what happens there is that takes the software and the merchant out of the control or of the branding, of the GUI, of the interface, or the interaction, the experience. They want to own the experience. And that needs to be not a jolted or jerky experience throughout the process, because there's credibility, trust, and anytime something is different, it causes folks to take a double take. What's going on here? Wait a minute. And especially with the height of online fraud and folks seeing these things in the news, they're like, is this where I'm getting, am I getting
scammed here? And I'm going to be one of those idiots that they talk about on the news that was so dumb that they entered in their credit card details on some sham website and then everything was taken out of their account.
So payment page, everybody has to have it, because you're always going to have that merchant or that software company that is too lazy or doesn't have the money or time or energy to really do anything about payments, and they just throw it up. So that's where you see the advent of companies like Bluefin and some of the others that you've mentioned have the embedded iframe, right? Where it's, hey, here's what we're going to do. We're going to embed this iframe, and all this little iframe does. And this isn't your grandparents' iframe. This is like an embedded iframe piece of code that just has the credit card number field and maybe the expiration and the CVV. So the merchant or the software runs the entire experience. That one little field, of course, the consumer can't even tell, is actually when they put their credit card number going off to a Bluefin, getting tokenized, coming back with a token. And by the time it submits from the browser to the merchant or the ISV or the SaaS, it's tokenized. So they're out of PCI scope, they're dealing with a token, and that's great. So that's like a great experience, and that's why you see this advent of iframes going on. Now, you're going to look in right now, you'll see here coming up in April, and yet a couple weeks, PCI DS's that's the payment card industry's data security standard for the group here. Their 4.0.1 enforcement of policies and processes to combat like mage card or e-commerce skimming, which means like even if you've used iframes and things, that you're going to have ways that your page is being interrogated to make sure that a bad guy hasn't gone into your web server and replaced code that maybe is in between that interaction between, for example, Bluefin and that web page. And so PCI is going on that. And it's a similar akin to if you go to the gas station and you put your credit card in, but there was a skimmer in there on its way into the device that you don't even know because it looks like it was supposed to be there. It looks like it's part of the hard form factor. It's a similar concept to that. And so we're seeing even iframes being challenged and having to become a little bit more robust in the way that they're integrated. Smart iframes. So that's there. I also think that the advent of wallets, I can tell you as a consumer, if I'm on Amazon or any of these places, no problem. I use them all day long. But if I'm on, like, if I find that product that Amazon doesn't have, I've seen it on television, friends told me about it, and I have to go directly to that website to make that, shoot, I want to give them my credit card information. Boy, I'd like to hit the Google Wallet, Apple Pay, or Amazon Pay, or one of these wallets. And then I feel much more confident, and I don't have to re-enter my credit card information, and I can just sit here on my phone, probably not while I'm driving, but maybe, and just go click, click, and never actually enter a thing except my thumb. And you've clicked your way through the whole process. Your phone's authenticated you to Google Pay, and you've checked out, and it already has your address in Google Pay and everything. I feel secure. I feel convenient. They took friction, added security, and really combating fraud as well. And so I think that those are the ways that the industry is that. Moving on to 3D Secure 1.0, and I want to be real clear, 1.0 is exactly what you said. And it's exactly why there exists a 3D Secure 1.0, and that's why there's a 3D Secure 2.0. And one of the major differences, in my opinion, that Europe, MasterCard, Visa, whatever it is, EMV Co. really has come in and added to that is, so the old process was always a challenge, right? So like, you're going to check out a United airline, you're going to get a challenge. It's going to be an OTP, or it's going to be an app, or it's going to be your bank app, or it's going to be United app. It's going to be something that you have to download. Talk about friction. I remember
some form of 2FA, some form of two-factor authentication.
Something, or an app. And it was like, I remember 1.0, I'm like, I am just trying to buy airline tickets on Air United, and I've done this 100 times, literally, for flying around. And like, why don't I have to go? You don't trust me, right? So 3D Secure 2.0 puts it onto the merchant. Let me get back. 3D Secure, at its end of its day, what it does is it's pushing the liability in the same way EMV chip cards do. It's pushing the liability for chargebacks or disputes where the merchant says, I took the charge back, but the consumer says, she took the charge, but the consumer says, I didn't make it because it wasn't my card. I didn't do it. That liability for that, if you use a chip card in real life to dip, not a swipe, but the actual chip card, and also if you use 3D Secure for e-commerce, that liability gets pushed back to the issuer of the card, Citi, Bank of America, whoever issued that credit card. And so what it does is 3D Secure 2.0 says, hey, it gives the merchant or the software the ability to say, this transaction is a $10 transaction or a $20 transaction. It came back and said, yeah, we want a challenge. We want to send out a request for OTP. The software can say, or the merchant can say inside there automatically, you know what, for this deal, forget about it. I'm going to eat the liability.
I'm happy to own the responsibility for this single transaction.
That's it. So it allows them, and of course, as your audience probably knows, what if you just turn that on to do it for all of them? That means you're getting protection on probably 70 to 80% of your transactions because no challenge was presented. And on the 20%, you're like, yeah, we'll eat those. So it actually mitigates the risk down. So I think it's actually a great technology, putting the power of that challenge interaction and that choice into the hands of the merchant or software. So I think it is a better thing. Now, when you go to, it's an issue or liability shift here in domestically in North America, not even North America, in the United States. Yes. But if you go to Europe, it's just a mandate, like it or not. And I remember when we were early on with the council talking to some of the folks, I think it was Amazon or one of these guys was the first to implement it. And they're like, whoa, friction. But the response over there was like, if everybody has to do it, then everybody has the same friction.
And there's
it's a level playing field. Right. So that's a little different here. But speaking to the United States, I know you're in Mexico, and you could tell me how it is there. But here it is optional. And I think 3D Secure can provide some value in that way.
Yeah, look, I think as long as it doesn't make me jump through 50 hoops to complete a transaction, I'm totally fine with that. Yeah. And I'm tech savvy. Hoops aren't necessarily a massive problem for me. If I really want to buy something, I'll jump through those technical hoops to a point and to a degree. But I'd love your thoughts on dynamic CVV because I had never encountered that until I got to Mexico. And obviously, there are major issues with fraud in Mexico. There's major issues with money laundering. The government is very strict here on banking regulations. They are very strict on authentication. They're very strict on signatures, matching all across the chain. I mean, if you get one tiny little thing out about a signature with a government document and it doesn't match exactly your signature on your passport, for example, the document will be rejected. It is like anti-fraud here is even chain of custody of funds. When we bought our house here, like we had to show a clear chain of custody of funds from this bank with bank account with my name on it to this bank account with my name on it to here. Where did those funds originate from? So anti-fraud is massive in LATAM, but particularly in Mexico. And I had never encountered dynamic CVV before, but that is forced by my bank, not by the merchant, but not all merchants support it. And that is the problem.
And that's the issue. And by the way, you hit it on the head. When you go to LAC, LATAM, there's more fraud. There just is right now. And that's because of a host of reasons. And there's fewer banks. And the reason that banks can do that is that they can actually force that because there's fewer options. Like if there was, I don't know, 26,000 issuing banks like there are here in the United States, this sucks. I'm going to go to that bank. You're way overdoing this. You're adding so much friction. I don't like it at all. But if you go to Canada, there's, I don't know, less than 10 major banks, maybe even only a few major banks. And so if they all say this is the way, this is the way. And by the way, it protects them all. And at the end, they're trying to do is they're trying to drive down the basis points of fraud. Maybe they got a 10 basis point fraud risk in their network and they're trying to drive it down to 7 and 5. And really, by the way, they don't care much about the experience as long as there's a level playing field. I think that's got to be at some point short-lived. I think that as competition comes in, innovation will be spurned and we'll be able to get away from those things that are onerous. Yeah, absolutely. Dynamic CVV. What a great thing if you're a banker. What a not a great thing if you're a consumer or a merchant even, because the merchant wants that money and the consumer doesn't want that interaction. So I think that it's something that will have to be innovated around. I also think that the power of competition can drive these things out of the system. And I think that's really what's at the heart of it there. I also want to make this other point. We're talking a lot about fraud, right? And fraud is what happens once the data has already been breached. So it's this nice little dark ecosystem, right? Where somebody gets into the back end of the merchant or the software or whatever, gets a bunch of credit card information. That's the hackers. We know what those guys look like, and where in the world they're probably more often than not coming from, et cetera. But those aren't the fraudsters. They're getting the data out of the back of the business. They're going out to the dark web and they're selling that to the fraudsters who are coming back in the front door of the businesses and using that for e-commerce or card present and those kinds of things. And so it's fraud, and there's all your fraud technologies like 3D Secure, Dynamic CVV, EMV chip cards, which make sure you don't have a fake plastic card, all those kinds of velocity controls and everything from fraud. But none of that, no amount of these banks investing into more fraud protections is going to stop the data. Because if you stop it at its source and you've got data devalued, data tokenized, data P2PE encrypted, data not there if it doesn't need to be there, then it can never even be fraudulated and hacked and then brought back in the front door through fraud. And so I think our company at Bluefin and our companies focus largely on data protection and data security. And so we're on that side of the world. Things about PCI, privacy regulations for leaking PII and PHI and personal information, health information. That's where our company focuses. And then in our technologies, if someone wants to use them, we do, of course, offer all those fraud protections that you mentioned that are there. But it's important to look at this as a two-sided situation, understanding that if you're a merchant or a bank, maybe you don't have control of the world and you're like, I can't stop the data security problems of the world, so all I can focus on is fraud. And okay, fair enough. But I think that our bicameral mind needs to be making sure that our industry is looking at both sides of this coin and valuing them. And it seems to me that there has been more focus over the last half decade on anti-fraud measures and technologies as pertains to the card brands and Visa, MasterCard and those folks. Because to a certain degree, I feel like that we're never going to be able to stop the data security. We tried the PCI thing, we tried all of that. But the truth of the matter is, I think payment facilitation and embedded payments and wallets and these kinds of things, orchestration, actually can fix data security for the small merchant level and the merchants that are actually getting breached more often, because they shouldn't even be involved in the security game. That should be built in to the software stack. And those guys want to do it too, but they need orchestrated tools. And they're not just going to go out and identify the best security vendor out there. It needs to be orchestrated into the platforms that they're already using. So I think that's where our focus is, to fix it at its source.
And I think there's two things here that the payments industry doesn't always get right or doesn't always think about. And I'll give you just one example. In this dynamic CVV world, how does that work in a subscription, an online subscription? That's the problem. They don't think about these use cases that are so common. If I want to subscribe to Netflix, or if I want to subscribe to some sort of coffee delivery service, or if I want to subscribe to anything online, Dynamic CVV does not work in that environment, because then every single time they hit my card every month, it's going to fail until I go back in and I update my card, create a new payment method, add in the Dynamic CVV at the moment. It hits my card right then and there for the failed payment. It takes the payment, and then I have to do it again the next month. So and it was the same with 3D Secure, did not take into account subscription-based services. And so
neither network tokens, right? Network tokens are still all focused on the one side of the equation. And I think the logic there, though, is if you talk to some of those folks as to the why, is as long as you've authenticated the card at the onboarding, And then it's okay forever and ever and amen. I'm like, okay, I get the logic there, but I am 100% agreement that these technologies need to take into account card on file, subscription, recurring, because anymore, that's what look at me with the wallet thing. That's all card on file, and that's the interaction I want as a
Yeah.
consumer.
Yeah, totally. And I think one of the other things, and I'd love your take on this, is being able to control the payment method. So e-commerce is all about personalization. So let's personalize the checkout experience down to which payment methods we show to a customer based on the risk profile that we think that customer presents to our business. And that's something that is not that common yet. So it's much more common in the B2B world, where I can control, do I want this customer to have a credit account with me? Do I only want to show them the ability to pay via credit card or debit card? Do I only want to show them the ability to pay on some sort of trade credit provided by a third party service? So I'm not providing the trade credit. Some third party is going to have to cover that trade credit and the costs associated with that. And maybe there's a surcharge added to that for that service for the customer. There's much more personalization around payment methods in the B2B world than there is in the B2C and D2C world. 99.9% of the websites out there, they will show all the same payment methods to all the same customers, regardless of risk profile, regardless of risk rating or whatever. We should be getting to a place of personalization with payment methods to help manage the fraud and risk profile of our businesses. But that's something that is not common yet. Your take?
I think you've just invented or innovated a new product for a payments orchestrator to provide a step up or step down approach to this, not only from the, as you greatly pointed out, from a risk perspective, but also from a cost perspective too, right? If I pull out my Citibank card, for example, let's say it's a debit card and I also have a bank account there. Why the heck can't they also say, let's go ahead and step this guy down to ACH? We already know he's got a bank account. This is his debit card. Let's go ahead and step that down there, and we have lower interchange costs, et cetera, and just do bank-to-bank situations, or step it up and say, he also has a credit product with us, and let's actually step this up from the debit and recommend that we want him to use the credit card because we think that this person actually might need to use credit for this situation. So you've got that side of it, but also from the merchant side, I do like the idea of us being able to orchestrate better experiences and offer the correct. It might be preferable in certain situations to demand a wallet or one of the pays, Google Pay, Apple Pay, or Samsung Pay, or one of these, because you might look at that and say, gosh, that's an additional layer, additional fraud firewall layer of protection between me and all of this. If I just get the credit card, okay, I know what I'm going to do with it and look at with it, but also this has actually been vetted even on the onboarding into a wallet. And so you might step them up into a wallet situation based on where they're coming in from, the geography, or the dollar amount of the product, or the frequency of which they're purchasing, et cetera. So I think that that's absolutely an area for innovation. And to your point, it's like right now, all payment methods, all the time, whatever we have to do to make the consumer happy. And also, by the way, if I'm presented a screen with 20 different options and logos as a consumer, that also makes me feel a little bit, that adds actually a layer of confusion at the end of a process, which could also have its own effect and be punished by abandonment. And I don't know which one to choose. And you don't want people to have to think. You want them to click out. So if you were to say, look, let's present this option and that option, or let's step up, I think that's an innovative way to look at it. Great. I like it.
And how do you feel about international, cross-border, multi-address, card, multi-account situations? And I experienced this. I'm a digital nomad. I travel all over the world. Born in America, lived in New Zealand almost 30 years, now living in Mexico for the last 2.5 years. Have family living all around the world, have some family living in Australia, some family living in America, some family living in New Zealand. For example, on Mother's Day, my mom lives in Australia. I'm based here in Mexico, but I may want to use my New Zealand-based debit card for my New Zealand-based personal bank account because there's no fees to pay in Australia because they have banking relationships between the two countries. But oftentimes my transaction will get blocked because my billing address is in New Zealand. I sometimes will have to use a VPN, and I'll have to set my VPN to New Zealand when I check out on an Australian website. So I go to an Australian florist online website, and I want to make a purchase there because it'll be free delivery, for example, because the online florist is 10 minutes down the road from where my mother lives. But if I log in and it detects that I'm from a Mexican IP address, I put in a Australian delivery address, and I'm using a New Zealand bank card with a New Zealand-based billing address, it just throws up every kind of anti-fraud red flag you can imagine.
We don't want to do business with that guy, right? Come on, he's just a world traveler. He's just a world traveler. That's the guy you want to do business with. This is a guy living their life and probably has needs products, and you want to be able to address them when and where they're at, without adding the fact that, gosh, this looks a lot like fraud. I think that some technologies that are coming to the fore on the data security side, really driven from innovation, because we're over here talking about the fraud side still. There's a data security technology that's bridged that gap, and I think could solve exactly what Jason might want. And that is, so over in the PCI world, it's called MPOC, right? Mobile Payment on COTS. COTS is a consumer off the shelf, so it's an acronym within an acronym. You know how nerds like to do it, like me. But really what it's saying is that, gosh, we're talking about cards and fingers and interaction of data and copy and paste and all that. But you've got a darn cell phone sitting in your pocket, which is a supercomputer and does all this stuff, travels with you. You authenticate with it all the time. Your face or your thumb or whatever it is, it knows where you're at. And so I'm here with Jason in New Zealand right now. I know he's here, so this is not fraud. Like, why can't we take advantage of that by bridging that MPOC, which is basically saying the device can use tap to pay. We already know that you use your phone to tap to pay, and that's neat. But what you're talking about is a card not present interaction where you're dealing with a website or a mobile app or something. So who's done this? So that new standard exists and is being rolled out. But really what's more important about is the innovation that's driving. And I'll tell you the use for it. So for example, Capital One has their Air Key technology. And so what they've done is in the chip of your card, they put an applet. It's their little Capital One Air Key applet inside of the chip. And so what happens is you're on a website. It's happened to a friend of mine a few weeks ago. They're on a website checking out. It noticed because of the BIN, the first 6 digits of the card, that it was a Capital One card. Yes. And it went out and said, I'm going to do this. And it pops up on their phone. And it says, tap your card to your phone. They tap their card to their own phone, the applet in their own Capital One credit card, tapped it to their phone. And it went back to the website and said, approved. So it knew because of the cell phone and the card, went back to the website. So now you've got a data security technology helping fight fraud in a fairly frictionless deal. And that's a step up. Jason's a world traveler, and you're like, is it that much trouble for you to tap your phone to your card? That's fine. That's fine. I'll be okay with that. So data security protects that integration of the tap to the card. And that's where the data security comes in. And then the implementation of that. MPOC itself was originally, or still really more focused on the merchant accepting a tap from the consumer. But this is taking that same thing and saying the consumer is going to tap to the consumer. And basically then taking data security and fraud technology, web and mobile and a physical factor, your card, and fixing fraud and travel. I think that's what the new world is going to look like.
I'd be totally happy with that. And so does that effectively, from the bank's point of view or from the card issuer's point of view, does that move the transaction from a card not present transaction into a card present transaction? Because clearly the card was present. I tapped it on my phone to identify that I physically held the card. Does that convert it into a card present transaction?
It's a great question, and the answer should be yes. But there's a reason. So first off, we all know what interchange is, that the cost of credit cards. And we understand that interchange is a percentage fee, right? It's called a discount rate. And what is it discounting? It's discounting the risk. So if there's more risk, there's a higher percentage fee that has to be paid to offset the risk. Card not present, more risky, higher. Card present, less risk, less cost. And that interchange that the merchant is paying. So remember, we have commercial and ecosystems at play here that want to continue to make the money, even if the risk isn't there. So that's at play. And then we have a definitional issue. So we say card present, the definition of that means that the card is present with the merchant, that the consumer is present with the merchant and the card is present. The consumer can't be present with themselves. And so definitionally, the industry would have to change card present to meaning, okay, we think the secure element plus the card, the merchant is living inside the phone for all intents and purposes. You know what I'm saying? They're at their app or their website or whatever they're doing, is that even if it's a website, then coming back through the app on the phone and you're just authenticating in that way. I think we need a definitional change, and we need to disrupt a little bit of the commercial interchange that might be enjoyed. Because in that situation, You think about that air key thing, or that one we just talked about, gosh, that takes a lot of fraud and security issues out of there. That should be a lower rate because it is effectively discounted the risk amazingly. But that's just not quite there yet. I think that's going to take more guys and folks like us to go out there and make everybody aware and be like, oh, wait a minute, we need to make commercial incentives, interchange cost incentives to drive this technology because it's so important, those kinds of things. So I think that's what it'll take. The answer to your question, the short one is, no, not right now.
And the banking industry might argue that person's wallet could be stolen, and so somebody actually physically has their card. But by linking that to an app-based experience where I have to authenticate even to open the app, whether it be through biometrics, face scan, whatever, now effectively I've added a 2FA layer automatically in the case of a card stolen scenario where, yeah, sure, I can tap it to the phone, but to activate it, I still have to give biometrics to be able to.
But you just said, think of the factors of security: what you know, what you have, who you are, where you are, maybe even I'm adding some fun ones out there. But what you have, I've got a card, also a cell phone, who you are, I've got biometrics that was required to open the phone, where you're at, what my phone is probably asking me occasionally to step up authentication with a PIN or something like that, whatever. So you've got multiple layers of MFA, multi-factor authentication possible with that interaction because the smartphone is involved. And I think that's where it's at.
That's a game changer. Yeah, I couldn't agree more. And I tell you, just to extend another scenario where I run into problems, and it's just an exercise in absolute futility, is trying to buy airline tickets. It is just trying to buy it on a business card. Half the time I got to use a personal card and then reimburse the personal account from the business account because it won't accept the business card, or it will only accept a business card from one region or in one currency, or it will try to charge me in the currency of the card that I've entered, despite the fact that I actually want to pay in the local currency. Right. It's just, it's mental. And half the time when I go to these websites of the carriers, the airline carriers, I can't get past their security, but I can go to a third-party broker like a Webjet or something like that. I can buy the exact same ticket on the exact same airline, the exact same seat, exactly the same price, but I have to buy it through a third-party broker's website because the carrier's website won't accept my debit card or my credit card. It is just phenomenal, the hoops you have to jump through to make an air ticket purchase. And especially when I've got a new bank card here in Mexico. I've got a BBVA card here in Mexico. I've got credit and debit cards, both personal and business, in New Zealand. I've got a Wise card for international transactions, and half the time, none of those will work on an airline carrier's website.
Let's look at we talked about United earlier, for example, and I'm just picking a name of one of the big four or whatever out here in the States. But what if that was a way for them to drive usage of their card? Hey, Jason, we realize your interactions with our website are driving you to go use Kayak or Expedia or one of these places. But if you carry our United Airlines credit card, you'll be able to tap it to your phone and all of your worries go away. Now they're driving a product that they're going to make more money on than the money that they're going to lose. By the way, the friction, you're like, I'm going to go on American or one of the other options because this is frustrating and they're easier. And that's where payments, data security, fraud, all these things are protected. And actually the company's boosting loyalty, removing friction and abandonment, and making more money because they make money on the interchange from that card because it's on them. And it's a beautiful world. I think that's where having a more holistic, sort of circumspect look here can be like, wait a minute, we can make the world a better place here, even just within airlines by implementing some of these technologies. They want more money. I want less friction. I don't want to have to go to third-party websites when I'd like to have a more loyal, direct relationship with you. And so it's just a win.
How about at least offer a digital wallet that has to go through some sort of extra authentication, or maybe I have to send you a copy of my passport, or I have to send you maybe I have to do they do that.
So you get the fast pass checkout, like the fast pass lane, checkout, because I've done this pre-authentication, pre-authorization, whatnot, and now I get the fast pass for fraud. That's perfect.
Exactly. And I only do it once where you have to hold up the card in front of your face. It authenticates your face. It authenticates the card on a screen capture in real time. Then you got to turn the card around. You got to show the back of it. It does the screen capture in real time, matches your face with your ID, does all that check. But it's a one-time thing. So if it was only a one-time thing, I would be completely okay with that, even if it takes me an extra 5 minutes the first time around, but then I have a digital wallet with them, and then I can load cards in and out of that digital wallet that are linked to that digital wallet by authentication, even if it's biometric authentication to add new payment methods to that digital wallet or linked to that digital wallet. a one-time thing is fine, but to effectively make it almost impossible for me to purchase with you every single time I log onto your website, that is ridiculous.
And at the end of the day, and I know you and I, sounds like we could probably talk for hours, but if you unwrap the whole like philosophical side of the evolution of payments all the way back to what it's really a big identity game, right?
Yes.
So it's if I really knew it was Jason and Jason really knew it was me, and I was like, I'm going to send him wampum, I'm going to send him money, you're going to send me bananas or whatever. Okay, you're going to give me something of value. I'm going to give you something of value, identity. So that's really what's going on here is identity exchange. Authentication is what? It's authenticating the identity of both sides of this. So that fixes fraud. And if you had a really good identity scheme that couldn't be hacked, then it would fix security as well. So really that's what we're going towards here. And I think that's why you're going to see identity, and you already are, of course, seeing conferences and conventions and technologies about identity. But that identity orchestration as it pertains to payments, like when you see with Clear, I go to the airports now and I had to do the thing, all the biometrics and the passport, and it was a tough onboarding, but now life is great. So that's the thing of orchestrating that. I think the payments industry needs to grow a little more. And I believe that we're getting towards different levels, maybe level 2 or 3 or 4, that's going to be focusing on identity versus just other factors from a credit card processing perspective. But my point is that I think that identity orchestration is a future evolution point. If we're not there, we're heading there. Because right now what we're doing is asking each and every merchant, call them the carrier for the airlines, to figure out identity and fraud for themselves by going into the Home Depot or the Lowe's of security and pick out the tools for yourself. And it's just too much. How about let's just solve this? And I think as a payments ecosystem in the industry, putting my sort of a board advisory hat for the councils and different people that I'm on, it's like, we owe that to the scheme. We owe that to the ecosystem. We shouldn't require them to have to figure it out each in their own way. We should be like, hey, this used to be a daisy chain where I'm passing the baton onto this person and all the risk of passing this data through all these different entities in the chain. Why don't we have an orchestration for identity? So I think that's where you're going to see the world going. So I think data security and fraud have a lot to do with identity.
I couldn't agree more. Now, from a Bluefin perspective, who are your customers? So they're not individual merchants? Are they like SaaS platform vendors? Are they the technology layer that somebody like an airline carrier would use? Is it somebody like a Shopify? Or who are your target cohort with kind of your orchestration, identity security layer through the Bluefin platform? Who is your ICP?
Yeah, so great question. So the answer is points of aggregation. So for example, and that covers a lot of things. So you might say a single merchant. There are merchants that we have that are major airlines that are, like I said, contact center, e-commerce, mobile, cargo. They got 200 cargo shops at the back of airports, gate, check-in, ticket counter, cart, just food, booze in the sky, just all kinds, retail, all kinds of different things. So is that a merchant, or is it really it's actually an ecosystem of lots of merchants, and because they have lots of merchant IDs, even though they're a big merchant. We'll look at a franchisor's brand is at risk every day if one franchisee gets it wrong and breaches, right? They're not going to say it's the franchisee's fault. They're going to point at the big name in the sky and be like, so-and-so had a breach. Oh my goodness. And so to us, like franchisors, they either have their own home built software or they have a SaaS software that they put in. So that's a point of aggregation, right? SaaS software or ISVs that just deal with lots of other small merchants. That would make us really, our focus there would be the SaaS or the ISV vendor. So we would be individually contracting with each merchant as they onboard, but only because of the fact that the relationship and the integration for the products that we have at that aggregation point. Same thing with universities. We have 440 D1 universities. Universities are a metropolitan area. You're talking about everything: ticketing, tuition, childcare, healthcare, food, gyms, parking, yada, yada, yada. Those ecosystems, that's a merchant. Really, no, it's a point of aggregation for lots of different merchant kinds of things going on. So that's where we typically come in, is at those points of aggregation, be it a merchant, a franchisor, and when I say it's a merchant, call it really an enterprise or SaaS, ISV, et cetera. That's our focus.
So let's take the use case of a university. So would you start coming into play right at the point where they get their like student ID card, or they get their student allowance, and they get maybe a debit card attached to their student allowance or whatever it might be? So do you start coming into play at any point where identity resolution and payments intersect? Is that where you
So,
come into play?
so now a little different. So here's how we got into the universities, right? So universities have lots of games, right? Lots of athletics or theatrical productions. So they're doing way more transactions for sports and theatrical ticketing than they are for like tuition payments. So that is like the big problem. And also remember, these are stadiums and box offices spread out through networks geographically that have all sorts of security issues, right? Because it's like you can't control everything. And what if you're on the road and you're in a stadium you don't own? But you're using their network, their
And you've got a
Wi-Fi,
mobile
and their thing.
terminal or
You
whatever
got
it is.
mobile terminals, but it's actually eventually moving maybe over the Wi-Fi or the local network. So it's like you've got all these complications when it comes to security. So where we come in for those kinds of groups is point-to-point encryption, right? We're injecting billions of encryption keys into each one of those credit card terminals. Every time you swipe, tap, dip, or type a credit card number, it's using a one-time use, super strong encryption key for that transaction, right? And by the way, if it's encrypted, the PCI Council says that whole data environment, that whole cardholder data environment, call it the LAN, the network, or the stadium, or wherever it is, the box office, is out of scope for PCI. So now all of a sudden, that takes all of their pain and all the things that they have to do to track and be in compliance. Because guess why? Because that data is devalued. It's not considered cardholder data if it's encrypted with P2PE. Likewise, for the data at rest, tokens. Hey, if you P2PE is great for card in motion, but what if you need to keep it? Store the token. And so we'll take that P2PE transaction, give you a token back for it, you store the token. So point-to-point encryption and encryption and tokenization, that was our entry point for these universities. So you come in on ticketing, for example, but then they say, gosh, we want to have this for everything else. Restaurants, everybody else you can think of on campus, the gym, parking, childcare, healthcare, a lot of big healthcare networks. And so they start a mission to go out and either directly, if they have control, or indirectly through their vendor contracts saying, you vendor will need to be P2PE compliant by this time next year. Otherwise, we're finding a new vendor. Oh, by the way, here's our vendor for that Bluefin. And the reason why they only want to have one orchestration platform, one network to say, here's the keys and here's the tokens. They don't want everybody doing it their own way. They want to control the whole thing. And so over a 10-year period, you have universities like University of California system that are like, use Bluefin at 100% of their points of interaction through all the different things because they force their vendors to comply with that, adopt that. So that is where our world is on now, would I like that to be over on the non-payments area? Yeah, and we have products for that, Shield Connects, that we've innovated in the last decade that could say, look, we can be doing those student cards and we could be doing that private education information, whatever, personal identifiable information or the healthcare information. We can be doing all that too. And of course, that's a natural progression for our company. I like to say it this way. We were working with a large healthcare network and they came to us and said, gosh, you fix 100% of 10% of our problem. Because credit card payments are only 10% of our issue. The rest of it's all this health data and PII. And we're like, oh my goodness, we want to fix 100% of 100%. And that was really one of those ones like, guys, we need to think beyond payments. And that's really what's been driving us. And that's where our focus is.
I love it. Man, what an absolute education. We've been talking for nearly an hour already, and you clearly, this is your baby. This is your space. This is an area where I play the role of frustrated consumer more than I do a solution expert in this space, more often than not. So it's absolutely fascinating to speak to somebody with the knowledge that you have around this. If I'm if I'm a merchant, I'm doing less than $10 million a year in business. I'm guessing that I probably won't necessarily have a use for Bluefin, but
you probably would have use for a SaaS then.
Yes.
And that SaaS would be our focus, our point to you.
Your underlying technology would sit underneath the payments layer in that SaaS platform. Makes absolute sense. What's next for you guys? If we were to look out 6, 12, 18 months, is there anything your customers are asking you for today that you don't do? Or are there any gaps in the market you immediately see that you say, we don't do that today, but in 12 months we will be, and we think that this is the next big thing for us?
Yeah, as we talked earlier, my other company, I started PayFactory, which is, yes, a play on the word payfac or payment facilitation, which, PayFac was, in my opinion, Visa and MasterCard's version of how to get payments into the fintech space, right? The old world is, I have a retail, I need a credit card machine, I need a merchant account. Okay, you're set up, you're good to go. And then integrated payments came along. Let's integrate that to software. Okay, great. But they wanted they wanted to really have a new thing that was 100% digital at birth. And that's really what payment facilitation is. And that's why if you experience it, for example, like you mentioned, a Stripe or someone like that, there's no like driver license and statements and bank statements and paperwork to fill out and blah, 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 blah. It's not this old application. When I say application, long forms like you're signing up for insurance or something like this. I go on there, I'm in someone's software, a Shopify or whatever, and I'm like, I want to accept payments. They probably already have half my data in there because they've already onboarded me into the e-commerce system, and I'm really not applying for it. I'm just activating payments. And
Yes.
to me, it's like a 2 or 3 minute process. Boom, boom, bing, boom. Okay, I'm taking payments. So it's a completely frictionless onboarding. It's completely, from a reporting perspective, 100% digitally wrapped. I'm not getting mailed statements and have to go to another vendor over here at First Data or Fiserv or somebody else. Like, I got to go over here and get my statements from them at the end, and I got to deal with this guy and that payment gateway over here for service and support. That's all confusing. It's nope, this is all digitally wrapped. If I need to update my bank account, if I need to do all this stuff, it's all digitally surfaced to me. That whole digitalized experience from the merchant's experience, a lot of what we've been talking about is making things great for the consumer. What's happening now is this orchestration making life easier for the merchant, because a lot of merchants, you go downstream, are really like super consumers. You know what I'm saying? Like, it might be somebody selling t-shirts out of their house, but they're a merchant, but they're really like super consumer. So they want something just as easy as any online interaction that they've had from the consumer experience, but they want to use that for the acceptance side. So orchestrating those layers, for example, like with my company PayFactory, from the acquiring and PayFac, and then also bridging that with the orchestration from the security and the gateway and the processing side, that is, I think, what the world needs right now. And having said that, it's a hole in the market position, because when you look at some of the names I've said, they're not even really PCI validated as P2PE compliant. And that's why you have issues with large enterprises that are like, boy, we really would like to use one of these big names, because maybe we have roadside assistance. Maybe we have 30,000 folks on the side of the road fixing tires. Those folks are an extension of our brand, but we're not in the business of building a Square or building all that. We want something like this, but also our mandate says it has to be enterprise grade security, enterprise grade management and dashboards behind the scenes. But the experience from the merchant needs to be this. That's that touch point where things are moving towards not just orchestrating for enterprises that we've been talking about at the Bluefin level, but taking that payment facilitation and making it make sense to digitize the merchant experience, so you can have a full stack, end-to-end orchestrated thing, not only e-commerce, as we see other folks have done, and as Bluefin has added retail with card present, terminal management, device management and orchestration, but then also the acceptance orchestration onboarding of the merchant, application of the merchant's experience. I think that is really where our focus is, to make our promise an entire product. And I don't really see anybody else out there doing that, to be honest with you. I think it's a market position that Bluefin and PayFactory with our joint products can own.
Love it. What's the best way to get a hold of you? Apart from obviously the website, which I'll drop in the show notes, and obviously getting a hold of you on LinkedIn, what's the best way to get a hold of you if merchants or SaaS software vendors or whatever want to talk all things security, payments, identity, all this sort of stuff? If they want to talk to you about some of the things we've discussed today in more depth and detail, what's the best way to get a hold of you?
Yeah, Bluefin, right? Bluefin is that front door. Obviously, PayFactory, if you're just looking for PayFac, that's there. Coming in through that front door of Bluefin, obviously, anybody can hit me up on LinkedIn. As you can tell, I'm passionate and personable. I've had a lot of conferences. We'll be at 2 conferences next month. For a time there, I was doing 200,000 miles a year in the air. So maybe I was more like you. It seems like over the last 5 years, it's been a little bit more grounded, but it's just been refreshing. But yeah, please hit us up at the front door at Bluefin. Mention that you saw me on Jason's podcast here, and also hit me up on LinkedIn. That's really the best way to track me down.
Now, as we do come down to the end of our time together, this is where I get to flip the script. I get to hand the microphone over to you. I get to let you ask me one question. Any question you like, can be personal or professionals. Mr. Ruston Miles from PayFactory and Bluefin, what is your question for me today?
Wow. Obviously, we've only recently met here in the last hour. And it's quite rare that I'm able to keep a high energy conversation going for an hour about the finer details of both payment security, payments innovation, payments orchestration, fraud, data security. That doesn't just drop. And I've done a lot of speaking engagements where you got to speak to the level of the interviewer. Not in this case. Tell me about your background. How did you get here? Because this is rare. I love it.
Thank you so much. No, look, I've been involved in e-com for over 25 years now. So right from the early, very nascent days. I'm 50 now. I'm not a young buck anymore. In the very earliest days of e-commerce, everything about e-commerce was hard. Payments was hard. Building the website was hard. Being PCI compliant was hard. Even finding the software or building something from scratch for e-commerce was hard. Trust in the market was almost non-existent for e-commerce. I had my own e-commerce pure play back in the day. I ran that for 7 years, and we would routinely get phone calls, and I don't know why it was Nicaragua, but people would say, are you a real company? Are you guys based in Nicaragua? Am I even going to get if I order from you, am I actually going to get my stuff? Is your website safe enough for me to put in my credit card details? We had a local number, we had a local 800 number, but then I'm American, so I was living in New Zealand at the time, and so I didn't have a Kiwi accent, and so they would go, but you don't sound like a Kiwi. Where are you based? It's just everything about e-commerce in the early days was just so difficult. And I think that most modern merchants today that are starting up for the very first time, they don't necessarily appreciate just how easy it is to get up and running on a Shopify or an equivalent platform out there. They just don't know how many barriers have come down. Now, it's probably more difficult than ever before to be successful in e-commerce, to acquire customers, to do marketing, brand, product development, customer acquisition, all that stuff. I'm not saying the business of e-commerce is easier, but the technical side of e-commerce has dropped radically in complexity. And I guess I've seen this evolution over the last 25 years of the industry, and I'm an extremely technical non-developer. So I'm a solution architect, and I've been a solution architect for 20 years now. And so I've had to work with many different platforms, many different vendors over the years, and have to think about integration with back office systems like ERPs and CRMs and CDPs and PIM systems and point of sales. And so I guess I've seen many different facets of this industry over the years, and been exposed to the pleasure and the pain of the industry over that time. So that's how I've landed where I am.
We're about the same age and have a similar experience of having being frustrated innovators, frustrated users all the way over our career, trying to make things better each time. And at the end, become solutions folks, because some of this is finding solutions that match from the past, and some of it's making it up on the fly and having a way to have that capstone and be like, okay, this looks like that. Those two go together, solves this, move on. So I love it. Thanks for that. And this has been fantastic. I really appreciate you having me on today, man.
If you'd like to get mentored by Jason for free, head over to greenwoodconsulting.net, scroll to the bottom of the page, and click Get Mentored by Jason.